Okay, we're ready to go.
All right. Well, good morning, everyone. Good morning, San Mateo area people. I'm Cheryl Angeles, President and CEO of the San Mateo Area Chamber, and happy to have you here today. This is becoming a very hot subject. I'm very happy to introduce Bahar Tolu. Did I say that right?
It's Bahar, but that's okay.
Bahar. No, I'm going to get it right. And she's going to talk about what you need to know now to make the most of your PPP loan and the forgiveness program, which everyone's very interested in. So with that, take it away, Bahar.
Thank you very much. I'm very happy to be here. And Pauline, if you move to the next slide, I will go through the agenda and we will get started. So we will briefly talk about what the Paycheck Protection Program, known as PPP, is for, who is eligible to participate, the downsides of the PPP loans, some of the factors we need to consider, and that would lead to should some of the recipients return the funds. Then I will bring up some of the new guidance that came as of May 15. Then we will briefly cover what they can be used for and what they cannot be used for. And then I will provide you a checklist to prepare for the forgiveness application and let you know what will impact that forgivable amount. And then we will get to some best practices. Next slide, please. Okay, so Paycheck Protection Program came to us with the CARES Act as part of that on March 27. It is part of the SBA offered loan programs, and it is coming through either current and newly approved lenders. And the program started in February 15 and it will go through June 30th. It is fully guaranteed by the government. It doesn't require any guarantees or collateral. They suggested that it was a streamlined application and approval process. Those of you who went through the first offer knows that it did not happen that way. The second one seemed to get better as lenders get more control over their processes. And the idea is that all or a big chunk of the loan will be forgiven. And the goal of this program was to keep people employed, even if they are not working full-time, keep them employed so that the demand for unemployment claims will go down. Next slide, please. So, who is eligible? We all hear about small business. Pauline, next slide, please. In general, all small businesses, including nonprofit organizations, can we go back? Anyway, I'm just going to talk about it while, thank you. So anybody who has, any small business who has 500 or less employees based on the last 12 months or for new businesses as of 2/15, employees, but not contractors. Contractors are not included in this. For certain businesses, depending on their industry, more than 501 employees could be eligible. If they're internationally owned, based on recent guidance, less than 500 employees may qualify. Certain hospitality businesses like restaurants, hotels, depending on their location. And most importantly, this was added relatively recently, individuals with self-employment income who file a Form 1040 Schedule C, who work as sole proprietors or independent contractors. That is why you cannot include, if you're an employer and you pay to contractors, you cannot include the compensation to them because they're eligible to apply themselves. And partners and memberships, they could apply as a company, not individually. So they can, the members of an LLC or a partnership could not file individually. They need to file as a company. Next slide, please. What are the downsides of it? As we've seen, especially after the first set of funds disappeared very quickly, that well-capitalized public companies who were not expressly excluded got shamed, basically. We all heard about Shake Shack, and for some reason their name sticks to everybody's mind. So there's damage to their reputation. Another one was LA Lakers, I believe. They should not be getting them. So with the new guidance, they emphasize again that the borrowers must make a good faith certification, and it is part of the forgiveness application as well, that they are facing current economic uncertainty, who isn't, and the loan request is necessary to support their ongoing operations, and they are applying for this loan because they are worried about the liquidity and available funds. So you will be certifying, everyone who has this loan will be certifying to this when they signed their forgiveness application. They also indicated that anybody who get a loan over 2 million, and in some cases the smaller ones will be as well, but any loan that is over 2 million, it will certainly be audited, and they want to make sure that there was that economic need necessary for that loan. For people who, I understand that it passed the deadline, they came up with this on May 15 and extended this safe harbor period. If you pay it in full by May 18, I'm expecting that there will be another extension, that you did make the required certification in good faith, no harm is done if you were to repay the loan. And lastly, it is about the public knowing the loan recipients. Even though it is not coming from SBA, they notified everyone that it will most likely be made public under the Freedom of Information Act. So if you don't want people to know that you are getting the loan, you may want to consider that angle as well. Next slide, please. So who should return the funds? These are the questions that you need to ask yourself and be prepared for it, so that if you're asked later, you will be able to explain that your company's financial condition necessitated it, based on what your expectations was going forward. If you expect that your business is going to be significantly impacted, that's why you were concerned. Or you feel that you needed the loan to justify retaining employees. In some businesses, it is possible that your business was significantly impacted, but your valuable employees could go somewhere else, and in order to retain them, you need the loan to continue to compensate them. Or another concern is, did you have the sufficient cash going forward to handle your operations? Do you have other sources than relying on this PPP loan? Do you have a line of credit, equity, cash savings? That is a consideration. And another angle is, if the loan is repaid, are you comfortable that going forward, if we have another occurrence or things get worse, do you have sufficient cash to effectively run your business? What is everybody else in your industry doing? And again, one of the consideration is, are you concerned about negative public reaction if you were to retain this loan and potentially damage your public image? Any of those considerations need to be in your mind if you are thinking of returning the funds. If not, make sure that you have to document your position. And a sidebar is if you repay the loan and they have eventually other options, relief programs and tax credits, you could apply for them. You will not lose your chance to do that. Next slide, please. Some of the new guidance that came with the May 15 update, I will point out few items. The first one was the loan maturity date. In spite of what I'm saying here, there's still a little bit of a speculation that they will want the funds back. But according to this update, it is 2 years from the origination date. All the payments will be deferred for 6 months for the portions that is not forgiven. The interest will continue to accrue during the referral period at 1% per year. And any amount that is not forgiven will be due over the 8 months following the initial deferral period in equal payments of principal and interest. This is important because if you do not use the total loan within that 8-week period, it may make sense to consider using that if there's a cash flow issue. It will still have to be used for acceptable purposes, but given that the interest is 1%, that is an option for cash-deprived businesses. But as I said, expect that there will be more clearance coming for that. The tax deductibility is another issue. People need to understand that any expense you incur or you pay for using these PPP funds that end up being forgiven, you cannot deduct them from your income because technically it's not you who is paying it, it's the government who is paying it. So you need to remember that if you have a significant change in your income, that may not be a huge issue, but if you have a pretty close income levels, all the payroll and non-payroll related acceptable expenses will no longer be deductible in your tax returns, which may result in higher taxes. So be prepared. The third clarification, which is a big relief, is the 8-week covered period and when it begins. We all heard over and over and over again that it was beginning the day the funds show up in your bank account. The payroll cycles vary for every client almost that I have, so I know that. The clarification they brought is you could, as an option, use an alternative covered period, and that will start with the beginning day of your first payroll that you run after you receive the funds. So you could push it up to, few days depending on where you are, and your 8 weeks, the 56 days will start afterwards. Whether or not this will apply to non-payroll expenses is not clear. I've seen contradictory information coming from the sources. It is something I highly recommend if you are going to use the alternative payroll periods, check with your bank and see what their interpretation is. It appears that it will not, based on what I'm hearing, but it may change again and there may be more clarification. Next slides, please. Rehiring laid off or furloughed employees. You have to document that you tried everything you can to rehire or bring back the employees that were laid off at the time the shelter in place came in. Remember that when you apply for forgiveness, the comparison will be for your existing employees as of either, depending on which period you use, but mostly at the end of February, to what you have right now. The idea is to keep everyone employed, your staff employed. So if they are not coming back for whatever their reasons, you need to document it. And if they are not coming, then you could hire other people at similar terms. The unemployment compensation by employees for relatively low to mid-level earning employees, because of the additional $600 a week that they are getting from federal government, created a situation where they could be making more money by collecting unemployment than actually coming back to work. So they may use that as a reason to not come back. They need to understand that if there's a legitimate offer made to them to come back to their work and they decline, they may forfeit their eligibility. So it's something to express to your employees if that's the reason they are giving to you. And there was also a discussion, which was one of the biggest curveballs with this application. When you applied, there was no question about full-time employees or full-time equivalent. They just simply asked you what the total number of employees are. The reason was the small business definition of 500 employees includes all the part-time employees as well. So they included that. But for the forgiveness, they are comparing the full-time equivalent employees at the time and current. And that argument created all kind of confusion because there are at least 10 different ways, depending on which guideline you're looking at, to determine what a FTE equivalent, full-time equivalent is. And the recent guideline came back and said you have to use a 40-hour week. So if you have two part-time employees who are working 20 hours each, that will be equivalent to one full-time employee equivalent. So bear that in mind when you're comparing the headcount for your FTEs. Next slide, please. So what can the loan be used for? Salaries, wages, commission, similar compensation for the employees. One word of caution, there is no clarification as far as bonuses. Don't use it as catch-it-all kind of a way, because depending on the lender's interpretation, they may or may not include significant bonuses. Self-employment income payments to partners or members. This is not for S-Corp, but if you have regular pattern of distribution of self-employment income, those could be included. All the benefit-related vacation, family leave, medical leave, sick leave, those could be included, but not related to COVID Response Act. Healthcare benefits, insurance premiums, those could be included, not the portion that your employees are paying, but the company matching medical benefits or 401k premiums, that sort of stuff. And this doesn't apply to self-employed borrowers. The federal Social Security and Medicare tax that the employer pay is not included, but state and local taxes, if they are applicable, will be included. As far as non-payroll related items, mortgage interest for real or personal property, but remember that this has to be a business property, not your personal home mortgage. Utilities, gas, water, electric, internet, phone, and transportation. I am asked many times what transportation is. There is no clarification. It just says transportation. So be careful what you are using for that. If you have any rent payments or interest on debt that was incurred, they have to be in place as of February 15 or earlier. Anything after that, you cannot use it. Next slide, please. What you cannot use it, that's another angle. When you applied, there was a one of the qualifying factors was that you cannot include any compensation over 100,000 to employees. The same applies to partners, members, or self-employed income as well. For 8-week calculation, the cap is $15,385. So even if you have bonuses or whatever that you were thinking to use as part of the PPP calculation, remember that $15,385 is the limit. And this only applies to actual compensation and not any of the benefit-related payments, nor does it include the state and local taxes. As I indicated in the previous slide, whatever their reasons, even though it is part of the employer's cost of the payroll, Social Security and Medicare tax expense are not to be included. If you are a non-US resident, any compensation to them would not be included. The sick leave or qualified family leave under the recently enacted Families First Coronavirus Act are not included because the employers are fully credited for those payments. And then the last but not the least, you have to remember all those non-payroll related costs cannot be more than 25% of the total amount to be forgiven. Next slide, please. So if you want to do a checklist, the sooner you go through this, the better you will be prepared. The first item, and I will send this to Pauline so that all the recipients will receive it. You could Google it as well. SBA came back with a loan forgiveness application. It's an 11-page document in every detail, how the worksheet, how the application will look like. Make sure that you are familiar with it, play with the numbers, look at it if you have time to figure out what you need to do. Take note of the 8-week covered period and the optional alternative payroll period so that you plan accordingly all your payrolls. Payroll companies could do manual payrolls if needed. Try to stay within that 8 weeks so that everything you paid will be part of the program. Use the proceeds for qualified expenses only. Even if you have the same business account that you are using, make sure to document and use these funds just for these purposes. Do not expend it and then put it back. It creates too much of confusion. So do not use it if you want to get the maximum benefit. Determine as soon as possible what your baseline full-time equivalent number is. Whatever the period, they give you different options to use as far as what period you are looking at. Determine what that is, what the wages and salaries are so that you are prepared. If you need to hire back the employees, do it as soon as possible and restore their salary or wages to where it was before. As I said, consider timing all your payroll processing. Plan and notify your payroll providers in advance what pay dates you will follow so that you are not rushing in the last minute. And most importantly, document everything that is related to these PPP loan expenses. You need to document everything as much as possible. Next slide, please. So what would impact, other than the use of 75%, 25%, all that, there are 3 factors that you need to remember because this will impact the forgivable amount, even if everything else is done correctly. The first is the number of employees. And as I said, it's that 8-week period that you are using, and you will compare that to, you have 2 options. Either you are looking at last year, same period, February 15 through June 30th, or you could look at January 1 through February 29. Whatever it is, you need to remember that you have to be consistent. And then if you bring back the employees by June 30, there won't be any reduction in the forgiveness amount. Same thing applies to salaries and wages. During that 8-week period, and compare it to the period that you are selecting, if the wages are 25% reduced or more, 25% or more, there will be a reduction. If you need to restore the salaries, they have to be done on or before June 30th. And this doesn't apply to reductions associated with employees who have more than 100,000. And the last item is, if you have the EIDL loan, any portion of that, that is a grant that is forgivable. Once they determine the forgivable amount, that amount will be reduced by that EIDL amount. So be prepared. Next slide, please. So best practices, they are in line with the checklist. Make sure that you time your loan funding accordingly. And with the alternative payroll period, it is a little bit less important. If you can have a separate bank account, even if your bank doesn't require it, you could create another account just to keep track of everything. Track and document everything that will apply. Make sure that you have a consistent formula for your FTEs. Next slide, please. Rehire and restore the wages by June 30. Don't wait until the last minute, and document everything. If you're offering employees to bring them, put it in writing. If they don't come back, get their response in writing. And if you are using other benefits like employee retention credits or FFCRA, sick leave, that sort of stuff, you cannot be using it in this loan as well. So make sure to identify them. If you can and you need to, schedule the bonuses, vacation pays, profit sharing, that sort of stuff within reason to come up to the numbers that you need. This also includes self-employment income, assuming the business is making income, of course, because they will be checking that. You could consider paying up to $15,385. And last but not least, I cannot stress this enough, make sure to work with your CPA, your attorney, your payroll provider, whoever you need to get guidance. Don't do it yourself. There's too much at stake. And that's all I have. I don't know how we are doing with time, but if there are any questions, I will definitely take it.
Bahar, thank you so much for this information. As usual, always well prepared, very insightful. Will you be making this presentation available?
I could send the slides if it helps, and I believe it's recorded, so I'm sure they will publish that as well.
Thank you.
Yeah, this is Pauline. I do have the recording going on, and I actually have the slides on hand.
Excellent. Thank you.
And Pauline, I will send you the application so that you have it. I mean, it's available out there, but I'll be happy to share. I know that lenders are coming up with their own versions. So check with your lenders if they already put something together, use that because they will be the ones who will help with the forgiveness.
Great, thank you. Nothing else left in the chat, Cheryl? Hello?
Bahar, excuse me, first talk today. Bahar, thank you. Just want to say thank you very much. Really, really appreciate your hard work to put this together.
Thank you.
Great. Maybe Cheryl stepped away. Oh, question. Michelle, can you unmute?
Yeah, hi. Bahar, I'm not sure if maybe you and I should take this offline. because as you know, my employees, their pay is not regular and consistent. So I've got this conflict with, oh, I've got to bring them back to their regular level when there isn't a regular level.
It is an average that you will be using. You are comparing January 1 through February 29 to what you will be reporting with the PPP loan. If the average is 25% or less, you are good. If it is more than 25%, then there may be a percentage reduction of the forgiveness of the loan.
Okay, thanks.
We could talk more.
Okay, if there are no more questions, thank you so much, Bahar. Okay, Cheryl's back. Great, thank you.
Sorry, a little cat fight outside. So thanks for joining us. We hold 3 webinars weekly for our business community. So you can check our website so you can see what's upcoming. We actually have another session later on today about the same subject. So thank you very much, Bahar.
You are very welcome.
Enjoy, everybody. Have a great day.
All right,
Thank you.
take care, bye.